6,500 rejection. Interesting. 6,505. There's the pivot. Your negative gamma. Or negative gamma. VIX drop from 27.8 to 27. Crude might have topped off there on that 15-minute. So crude topped off. That's what's gonna give this market some fuel. Back in negative gamma. Hey, Koshik. So, as I was just watching yesterday, and after I came off stream, I was just taking a look at the price action. I was like, oh, we're hanging out at this dealer positive gamma level for the most part. And it just acted as this like heavy resistance. And it was like all, if you remember all the blue positioning that was there at 6,600, 6,605, 6,610. I think we ended up topping off at like 6,608 yesterday. And then the bear thesis finally played out. So it definitely messed around with me. I remember having a bear bias going into the day. And it took forever to actually play out. And then I was also watching Trump speak and seeing how the market would react, and should have known that more downside was expected, especially because we didn't end up closing that gap that we opened, that we gapped up yesterday. We had left the gap into close, and I had a feeling that when Trump came on, we would get that nice drop. Mind you, it ended up dropping quite a bit more, because we're opening up here at around what, 64.80 or 64.90, 64.80, yeah. But it was just an interesting watch. Oftentimes, that area, that dark blue area on the gamma chart, sees a lot of resistance. And we just couldn't blast through. then the market fatigued, and then it stuck around there for quite some time before the VIX started popping up a little. What are you looking at today? Bearish, yeah. Thinking the same too. Wanted to see the bounce, and the bounce came almost immediately. And now it's just going. Now we would like consolidate a little bit, but judging by the way this candle looks, it's looking pretty bearish. Sadly, I got no positions, but I didn't see much either. So obviously we were at E on ES there, but I don't love taking like the first 5 minutes, especially when I don't have like a solid liquidity level that price action swept. 6,500 was interesting because you got that the cushion there, or not. Technically, it would act as some sort of break in price action, especially within negative gamma. And we seem to have rejected it. It's pretty large levels at 6,500. And now we're approaching this weird fishbone kind of pattern, which for me, I have no edge reading this until things start to clear up and more positioning comes in. Yeah, when the market dies down, I'm curious to know if you trade after like after lunch, or you just call it a day after the AM is done. I don't want to take you from your charts right now, so just continue reading it. That's interesting. Yeah, I find that in the PM session, I have to be pretty strict on my rules. Otherwise, I'd be blowing accounts left and right. Like if I were to like rank trades, it'd have to be like a darn close to A plus in order for me to take that trade in the afternoon. Though I have to say there are times that I do mess around with an eval or two during FOMC just for the heck of it. What does your deck spot gamma level say? Positive or negative? Do you know if it could be conditional? Like, is there like a certain level that we have to pass in order to get that meltdown on the GEX by OI, or maybe a certain time based on where the price action is? Or it's like not really possible to read it based off of that, or maybe you're just still getting used to it. Initially, I wanted to see downside yesterday, and I thought we would get the gap fill yesterday. But when we didn't gap fill, I kind of figured Trump was going to do it for us from a liquidity perspective, anyways, just to fill in liquidity. And then, but I kind of wanted, like, I'm leaning more towards that the low is in for the week or two, and I wanted to see a bounce into the 6600s, maybe 6700s, and that's where I wanted to reload my puts. But the market may not be so kind to give me that opportunity. Approaching that 6500 level again. $6,500 SPX, I should clarify. $50 ES. Ooh, nice. Above 65.50. Just above the VWAP then, eh? Like, I think the VWAP's measuring at about 65.45 right now on ES. I had a 65.20 pivot that Alma noted on ES that I just kind of like threw onto the chart. Let me see here. Yeah, her upside pivot on SPX is at 65.05. Which kind of differs from the ES level. ES, the key pivot is at 65.20 for the downside move to get confirmed. It needs to break 64.70, 64.65 with 63.80 and 90 as the first target. Which is interesting because I think Doc was talking about that this morning. I caught a bit of his morning prep, and I think he was talking about that 63.80 area too on SPX as a toxic level. Now, I know the verbiage toxic kind of comes from Britney Spears becoming toxic, and Vol Signals uses it all the time. So I know for a fact that Doc likely gotten that from Vol Signals, since we were in the same Discord there. If the break 62, 60, 70 will come. To the upside, 65.85 is confirmation on ES. Alma Centroid is at 64.40 SPX, which is quite a distance away, but would be an awesome short target should we get there. $65.50. I'm seeing now. It's value area high, right? Roughly. So not a bad spot at all to take a shot. I'm a little too mixed in opinions today. I can see the downside path, but I can also see an upside path. What's kind of silly though, I'm not really kicking myself because I felt like it was a bit of a knife catch, but as soon as the 15-minute ES candle closed doji and NQ kind of closed like a little bit of a bottom wick, I tried it on my live account just along there just after 8:15 and didn't hold long enough. I think I got, as soon as it went up to the 5-minute 80 MA, just in case it was going to trend down, I decided to close it out for, I think I got like maybe 4 or 5 points on that, which is not great, especially after seeing where we ended up now with the benefit of hindsight, of course. Hey, there's your 65.50. I'm also looking at crude oil. I noticed crude oil has been on a rocket since last night's Trump announcement, and we seem to have topped out at around 9. So what we're seeing here could be fuel based off of crude kind of pulling back from the 114 level. And right now crude seems to be like I guess the measure for inflation, right? Because of the war. Yeah, NQ just hit its value area high too. Sorry, I didn't realize I was on mute. I don't even know how that happened. But yeah, it looks like you got that sweep of the 53.75 level on ES. I don't see much here. But that's just me, and my views have kind of been a little off this entire week. So, and then for the trades that did go in my direction, I did not hold long enough. Would you wait for candle formation on the 1 minute or 30 seconds before you would enter? Oh yeah. I forget that you always watch out for the bull bear volume. This was a previous day low, so I don't know. It just looks rough. Like it looks like it just wants to keep pushing. So I'm a bit I don't see much here right now. Besides the previous day low. And we can totally reject previous day low. From volume profile perspective, on a 1 hour chart, I think we're at another high volume node. It's like a medium volume node right now, but it is like a little peak node here. With a low volume node towards 65.76. We pretty much rejected another low volume node at the bottom, which is one of the reasons why I entered that long in the morning, and only collected like 5 points, sadly. See volume in the 1 minute, 30 second, and 5-point range bars for execution. Okay. Looking pretty good. Previous day low rejection. I think you would have already gotten your like 7 points. Well, depending on where you would have entered. I'm not watching the 30-second chart, so I have no idea. The 1 minute held the previous day low pretty well, and it did like a little top wick. But it's only been, I mean, if the entry probably would have been like 59 or 60 had you entered after the 1 minute close. So it definitely didn't give 7 points yet. Well, now it did, but decent rejection at previous day low there. I just hate the look of this chart on the 1 hour. Like the 1 hour looks like a break of structure or a change of character, whatever you want to call it from an ICT perspective. It doesn't always hold, but it's 10 o'clock. It's a good read. Very great read. Was that the last 1 minute candle at 10:03? I think I saw some like a green shoot there too. But I'm watching it on Trading View, so I don't know if the data is any different. Mind you, it's under the simple moving average. I forget which what's your moving average? Is it set to 20 period? And you would normally scalp for, I think you mentioned about 7 to 10 points or something like that, based on this. So I think, even though it wasn't the A+ scenario, I think it would have played in this sense, in this in this particular moment. But I agree with you. It's better to wait for that A+. Unless you want to be trashing accounts. Like I used to. I broke through that test level with very large buy volume, so no need to force short trades there. And volume average is 15. Oh, I see. You use 15. On the 1 minute, you use the 15? Yeah, it's not too different from what I'm seeing on the 1 minute. And that's a good no trade. Great read, Koshik. Very good read. I would consider that a win in my books. Gotcha. Understood. I think the straddle was pricing in about a 50-point move from open, and we opened at about 64.95. So today we're looking at 65.45 roughly as a priced in move. And then the straddle low would take us to around Alma centroid. At a 4-hour, after the 10 o'clock close, it was a hard short for me too. Like, the 4-hour shows like a massive bottom wick. And the 1 hour shows that change of structure, or change of character, or break of structure, whatever you want to call it, from an ICT perspective. So I'm not in love with trying to take a short. Now, if we approach a low volume node of some sort, different story, but I don't see a low volume node until about 65, 78-ish. It's about a 5-point range there for a low volume node. And it could run towards 65.85. And that would only take us to, is that about 15, 20 points, 15, 20 points would take us to about the straddle high. And we're quite a ways from a gap fill still, so. YM is not following though. It's all driven by NQ, this move. YM is, yes, it is pushing up from its low a day, or low overnight, but we haven't swept that 430, roughly 430 high of last night, which would be that where that break of structure is that you see on ES and NQ. And YM is still hovering beneath that. So it's still not showing much. It's pure negative gamma today. After lingering around positive gamma yesterday. I'm only trading reversals, so not many entries this week or this month. If this reversal system works well, then we'll try to add some kind of continuation methods, but until then, only reversals. Yeah, that's fair. Yeah, I like that you're very strict with your entries, and that's a great trading characteristics to have. Yeah, because you can only play reversals during negative gamma, or sorry, in positive gamma in theory, right? So you normally wait for the GAC spot to say, hey, we're in positive gamma. So that's when reversions are generally there, or higher probability. For me personally, I don't mind playing reversals in negative gamma. It's just getting in is a freaking nightmare in negative gamma, because it's the reason why you don't like or it's a reason why you don't really play reversals in negative gamma, right? So, but if we're at a key a key low volume node area, like somewhere on volume profile that shows up on the 4 hour or the 1 hour on the higher time frame, there will be times when, like for instance, this morning at around 8, when we got that 5-minute or 15-minute doji candle at 8 p.m. Sorry, 8 a.m. That's when I decided to long. I just didn't want to hold because we're in negative gamma, right? So I thought it was just a nice reversal to play. Initially, I thought I would hold towards the 15-minute ADMA, which would have probably given about 10 points from my entry, but I only gave it up until like 5 points off the 5-minute ADMA, and I closed out. And I was like, yeah, I'm not going to test my luck. But it was a key volume profile node that it bounced off of. And just so you kind of see what I'm looking at here, I use an indicator on TradingView from LuxAlgo called volume profiled with node detection. So I'm gonna see if I can screenshot that and show you. Yeah, I like that 6576 level too, because I think it lines up with the volume profile, low volume node on the 1 hour. All right, let me show you this here. Just going to use the orange highlighter or orange rectangular box here. You can kind of see what I was looking at in the morning here. This is a low volume node, pretty light volume in general, but that was a spot that the indicator had picked up as a low volume node, and I would normally see it as a low volume node too on ES, which is why the moment that we got like that 15-minute doji, I wanted to go long, and I'm an idiot because I based it off the 4-hour chart. Sorry, I shouldn't speak negatively about myself. That's bad psyche. It's bad for my psyche, but especially as a day trader. But from that 6,500 level, in theory, I should probably hold until a high volume node around here, or the next low volume node, as like maybe having a runner. But I did not have a runner. I only took this one single ES position. But this is why I also like the 6580 level that you pointed out, or 6576. And this actually correlates well with the 1 hour node detection too. Anyways, that's that. About 10 more points. 10 more points would take us to about 38 on SPX. Let me see where the halfway gap is today. Huh. So that short would that you're that you're thinking about right now, it would line up perfectly, almost perfect with the SPX half gap level. And oddly enough, the half gap is a weird thing, but oftentimes we do get a high probability move towards the half gap, and then you see a rejection. Like, it doesn't always fill the full gap. Not until later. If the market, I guess it depends on the flows, but I find that half gap is like significantly higher probability for a gap fill or to play into rather than the full gap fill. $65.89. Yes, is another level to look out for. $65.895. Yeah, the 65.85 level. I also have a pivot there. And this lines up with Alma's calculations. 65. Yeah, to the upside. So if 65.85 to the upside is broken, then we're probably going for that full gap fill. Is what she was, that was her pivot level for upside confirmation. The sellers are getting destroyed right now. Yeah. I can only imagine. I'm glad I did not short anything, but I'm also very disappointed I didn't hold that long, because I was holding a bull bias initially, but once I saw the charts, I figured we can go anyway. Crude oil still coming off. All right, we're in that low volume node area now, on the 1 hour, but I would like to see us go a little bit further into it on the 4 hour, just to see some sort of pullback. Like, it can't just be a straight line up, can it? What also bothered me about potentially going long was that the VIX opened gap down at 9:30. Not many points. I mean, it gapped down from 27.6 to 27.18, and yeah, I just wasn't a huge fan of that gap being left behind. If the gap filled, I would have probably considered a long if there was like some favorable candle formation, but here's the pullback. Yeah, see if this 5-minute doji candle holds on NQ. It's not high volume or anything, but yeah, one of the things that Alma does, she offers these weekly sentiment overviews. So she would say, okay, Monday, we have a cautious risk seeking buy the dip attempts. And it's based on her analysis. So she reviews all the Greeks, as you saw from that Greek cheat sheet that I had shown yesterday. But she reviews all the Greeks and all like the 3D charts that she has and heat maps, and she comes up with a weekly sentiment. So on Monday, she said cautious risk seeking, buy the dip attempts. And then on Tuesday, she said force optimistic interpretation, fragile trend, false breakout risks, vulnerable to reversals. I don't think we ended up getting any of that on Tuesday. Well, we got force optimistic interpretation, but I don't think we got any pullback. Wednesday, she noted that it was stress. It's a stress apex, choppy but not bullish. It was pretty bullish to start, but it did top out, and then we got the bear move, and then Trump, and then the real bear move came from Trump speaking at 9 p.m. Eastern time. And Thursday, she noted early optimism may push prices higher, but overconfidence and underlying suspicion could trigger sell-offs. Risk appetite may oscillate between bullish and risk averse. So I think it's more or less what, like, initially I was thinking there'd be a nice bullish impulse. I just didn't know if we would cap off somewhere. And I think you were kind of looking for the same, where you're expecting some sort of reversal. Mind you, your reversals are more scalp based on a lower time frame. But But yeah, she's expecting some sort of overconfidence and underlying suspicion could trigger sell-offs. Risk appetite may oscillate between bullish and risk averse. And this is a sentiment that she comes out with on Sunday night. She normally posts the weekly report. And oddly enough, I think more or less she happens to be correct. Barring any like major news, but she reads the options market and sees where the market is stressed, or where the market is I guess vulnerable, or where there's like an influx of potential buying, and then she just kind of highlights that based on all the Greeks that she reviews. But I think she's still only about 65% correct when it comes to the weekly, and she notes that too. She said, hey, don't work off of my sentiment for the week, but it's something that's there. If you need an underlying bias, it's there for you, but things change during the week. So trying to predict the market move every day in advance, well, on a Sunday night or the Monday through Friday, is a tough one. Sometimes I observe that if I jump onto these moves, it comes back to the actual level, like 76.5, and go in my direction. Yeah. Like I said, man, like this is great. This is great discipline. Yeah, it could just be that initial reaction, right? And it's very possible. Like on the 1 hour chart, you have a low volume node, and we're in the midst of it at the 65, 75 level that you mentioned. And on the 4 hour, we're not even there yet. And we'd hit the edge of it at 65, 76, 50 on the 4 hour. That's the edge of the low volume node. And you're spot on, right? Like, your intuition there was perfect based on what you've seen in the past. So it was a good no entry again, in my opinion. At 65.45 level is a lot of positions came on, I think, because we're seeing about 5,800 positions. To start the day, we had about 1,900. Now it's at 5,800. And they're dealer longs. So things should definitely slow down there. And currently we're sitting at around 65.30. So if we move 15 points higher, 10, 15 points higher, then we would hit your 65.89, 65.85 level. No, I don't interpret it as being fearful at all. I think it's market intuition. That's something you built over the 3 years, right? You've seen it enough times that you've included it in your analysis, which is great. On the other hand, there are times when I lose and I want to lose it and smash my keyboard. And I have to really talk myself down. Bit more emotional. Which is why I try to constantly adjust my self-talk. Because speaking negatively about myself, it doesn't work. It doesn't help my trading, and that's one of the things I had to adjust. But I'm glad that you're not fearful of taking trades and losing. But yeah, taking unnecessary losses is it's unnecessary, especially when it's an edge that you already know. So here's that pivot, Alma's pivot at 65.85, and I think we almost ticked the 8.9 level that you had mentioned. And we also happen to be sitting at the massive dealer long, which is like a local positive gamma at 65.45 SPX, which also happens to be the straddle high. If we're going to reject, I would say we reject here. But it's very possible that we could just continue a trend up too. $65.46 now. I don't have any real edge here. Yeah, I wouldn't take a short. I'm just gonna watch the candles, and there's nothing to my liking here. It just looks like vol is being crushed. Sorry, when I say vol, I mean volatility. And if volatility crushes, then we're gonna blast through this pivot of Alma's, and we're going to go for the cap fill. I can't believe I didn't hold my bull bias. I don't know why. I don't know why I folded, because I essentially captured the absolute bottom with a 4 to 5 point stop loss. All right, there, gap fill. So that was the upside confirmation. Oh, amazing. All right, I'm going to have to adjust my charts here. That was amazing. One of the guys in the Vol Signals Discord tipped that yesterday was a put buying day and today would be a call buying day, and that was based on what would seem as if it's insider information, but I don't know. Amazing, we're just on a rocket now. However, the target will, okay, let me see here. To the upside, 65.85 is the confirmation, with 66.25 being the target. And we blasted through that already. Iran drafting protocol with Oman for Hormuz Strait traffic. I'm not seeing any real news. This has got to be structural. And I was watching CL, and CL dropped basically from 113, 114 all the way down to 106. So that was a gap fill. We're at a high volume node again. Back at 6,600. Amazing. 6600 TP. Yeah, this is insane. Every 1 minute candle is like 15 points. It's a little too volatile for me to do anything. I mean, I like volatility, but this is insanity. If you look at VIX, we gap filled at 24.5 and then rocketed right back up to 26.39. Like, how did the VIX even do that? And now we're right back down to 24.75. I just tried an MES just for the sake of it. Got an entry at 25, which is like roughly around that 5 minute close. A single MES. Nothing crazy. Yeah, my stop would be at the high of that wick. And I would like to see it come back down to about 65.90-ish, if not 85. The volatility is just too great for me to size up in this. One-minute candles are still on average about like 10 points. Yeah, that's that 85 level was Alma's upside pivot. It's the main reason why I would probably take it off there. I'm not betting on complete tank in the market today to new lows. I mean, there's a good chance that my stop loss ends up hitting anyways on the single MES, but it's not much risk at all. Since it's only one MES. Check on the yields here. The US 10-year yield. Looks like it's coming down a little. We're back at 4.3. The weekly would suggest more downside. US 2-year yield. So inflation fears are dying down a little. Is the way I'm seeing it. And the weekly on the US 2-year yields is hovering around 3.79. And I think the Fed fund rate is between 3.5 and 3.75. So probably likely that the increase in higher probability of Yeah, the higher probability of a rate hike being priced in into the end of year is likely being reduced again. I was looking into a butterfly call or also a butterfly put, but the cost was like pretty high, so I didn't want to mess around with it. And today would have been the day to enter those calls, the butterfly calls. Butterfly calls basically, I don't know if you're familiar with it, but it has, actually the best way to show you is, one second here, I'm gonna pull it up. All right, so this is butterfly call. You buy 6,600 calls, you sell 6,750 calls. Actually, this should have been, no, that's correct. Yeah, 150 on each side. So the body of the butterfly is 6,750 and the wings are 6,600 and 6,900. And this is how like the profit profile ends up looking. Like you're risking about $3,000 to make 12K, but you're never ever going to see, I shouldn't say never, but you're not likely to see the peak upside. Or peak profit, I should say. Like today, it went from about $35 to about $45. So what is that? I think about 1/3, so 33% gain on this massive move up. And the fly, it's centered at 6,750, so your max profit is at 6,750, and it would have to hit by April 30th. But ideally, you would actually be taking profit along the way. And then the put fly that I was looking at is much better. I think it was only around like $8 or $9 for premium. Oh yeah, I'm gonna go to break even. I can't even take partials. I only took a single MES. I wanted to see a wee bit lower, but I don't think I'm gonna get it. I'm at break even though. On the stop loss. Yeah, what's interesting, I'm just going back to like the 1030 update on the OptionsDepth gamma chart. And at 1030, where it was price action was sitting at around 65.85. The gamma trough was at 66.02. Sorry, I said 65.85. Actually, we were closer to 65.44 on SPX. And we ended up peaking at 66.02, which happens to be the gamma trough. And it rejected so beautifully. On the daily, it's nowhere near that level. Which is why I still find the intraday very valuable. And then moving on to the 1040 update, still looks like it's roughly the same. And now that the 1050 update, which is the latest update, hit, I guess after all that price action, it looks like the positioning obviously has changed to accommodate that price action. And the gamma trough is at 65.95 now. So it kind of dropped. Yeah, I'm probably gonna, it looks like it's gonna hit break even. I'm not too worried about it though. A good level that you had at 6,600. I think the value area low is, or value area high was there too, which I don't know if it adjusted there, but I thought it was a bit lower. But those are good levels, Koshik. Where would you have entered though? On the downside. Sorry, on the would you have tried to play that massive move up? Interesting. I've always used the 382 and the 618 and also the 50. I feel like this 15 minutes gonna close like a hangman pattern. And one of my trading buddies just messaged and he said he got smoked trying to take a short scalp. Short at 66.32.5. There was a seller there, 66. 32.5. Yeah, and the volatility there cause that massive spike up beyond your short level, right? That's what I hate. I mean, in theory, it's a perfect entry. You would have gotten a much better entry than I did on the, because I entered at 66.25 and was off the 5-minute candle. Yeah, and your price went to the target. That would have been like, what, 32 points? What made you take that one versus the others you kind of said no to? On the top. Yeah. I just drew it. My fibs are set at the Fibonacci levels, the 382 and 618, but let me see if I can adjust that. Yeah, because I think it. Yeah, the 25. Oh no, wait. Let me see here. Yeah, the 75% is at 6,600. Yeah. So that wicked me out, and then it went. Normally, I would just leave my stop loss because I kind of figured that that was like the top for a bit, and I wanted to see us climb a bit lower. What it should have been is my ad. I like that 15-minute close. It's very similar to the 5-minute close at 10:40. And this thing should come down to 65.85, I think. But I agree. 6,600 take profit is probably it's the higher probability take profit. Oh yes, thank you. Yeah, what I was saying was like we can break above that 65.90 level still and just rocket above. Like the positioning allows a move of from 65.90 all the way up to like 66.30 with very little resistance. But it kind of reminds me of the Tuesday where we also had this deep negative gamma level and it took vol dropping really hard on news to really skyrocket that position. And then we pumped, I think, a good 60 points, 80 points. And that was on Tuesday. Oh boy. That's horrible. Yeah, did you catch me talking about or responding to your vol your lesson learned about not poking your finger during insane volatility? Oh, yeah, yeah. I think I was just basically saying that all of us have caught ourselves doing that. Every single trader, and oftentimes now I wait for things to settle down, especially during like a high vol move where you see VIX at 20 drop to 24.5 and then rocket right back to 26.5 within a matter of like minutes. And when something like that happens, I mean, you're getting an ATR or an average range of about 10, 15 points, maybe 20 points, depending on where you timestamp it on ES on the 1 minute chart. And I've been burned like that so many times trying to knife catch, or I guess it would be the opposite of a knife catch in this case, but it's a knife catch to the upside, shorting the upside, or like a massive bull move. So oftentimes I wait for the 5 minute to kind of work itself out, and then maybe like a candle formation might pop up for an easier scalp, if you will. But I liked your entry at 32.5 because that would have been that's significantly better than my entry. It's 7 points better than my entry. So if you do take those trades during high vol moves, you have to adjust your stop loss to suit the volatility or the average true range. If you use an ATR on the 1 minute or 15 or 30-second chart, then you can expect that, hey, in 1 minute we can move 20 points, let's say. Like you had a 1 minute candle that was 36 points, which is insanity. But so if it says if the average true range was 20 at the time, based on the candles coming up from that 65.75 level all the way up to 66.45, your average true range would probably be somewhere around like 15 to 30 points. And if your average true range is that, then in theory, you have to give that as your stop loss because the volatility is so high, right? Yeah. And February was like the last time that we saw decent positive gamma, like on a daily basis. It was essentially positive gamma all the time, right? This is actually one of the reasons why I track the straddle on a daily basis, because it's a vol adjusted. I guess it's like a vol adjusted prediction of what the market range would be. It's like, hey, like I shouldn't expect 100-point move if the straddle is only pricing in a 20-point move. There are times that we could run beyond that, but from an average perspective or probability perspective, it's not likely that we are going to run 100 points when the straddle is only pricing in 20, unless there's like a major news that or a catalyst. So I like vol adjusted levels. So yeah, I think every morning I just recognize that I haven't changed the screen in quite some time, but I normally identify the straddle every morning, and you can see that on the options chain, any options chain, right at open. I have an interactive broker account with where I pay for data on a monthly basis, and because I have an account with them that I trade, like that I swing trade, and I would look at the option chain, and here I'll show you how it looks if you haven't seen it before. All right, so this is a screenshot of a options chain. The straddle would be so it's normally called an at the money straddle. So it's whatever. So in the morning at 9:30, I log what the price was at open. So for instance, the opening candle today was, I think, 64.94. The closest strike to that would be 64.95. So I would look at the 64.95 strike and would notice, hey, this is the call side, and currently they are pricing in a 20-point move right now, and I think at the money is roughly at 65.70 right now. So let's use this as an example, and we could pretend it's at the beginning of the day, but right now we're like almost halfway through the day. So using 65.70 as the at the money straddle, you see the market is pricing in, or traders and the market and market makers are pricing in about a 20-point move to the upside for calls. So if someone bought calls here and you add 20 points, because it's essentially, you round it up in 20 points, it's pricing in a move of 20 points. So 65.70 plus 20 would be 65.90. So currently that's what the market is pricing in. And then to the downside, it's about 20 points too. Obviously when I took the screenshot, it wasn't perfectly in the center, because when you're perfectly in the center, you're more likely to get like the same straddle price. So on the put side, which is normally people betting on downside, the at the money straddle is also just around 20 points. So let's say 21 points here. So you're pricing in a move towards 65.49 based on this. So it's just a volatility adjusted way to track what the market is currently pricing in. And you always take it at the money. which is whatever the current strike is. So in the morning, I can tell you now because I checked it. The straddle was what was it? 52 points. Yeah, exactly at 9:30. So at 9:30, I'm probably like, oftentimes I would check before 9:30. I think it was Vol Signals that has a tool where I can just like type in some command on Discord. Obviously, it's a paid Discord, but he has a tool, and I've been using that as a shortcut way. But it's all based off of this way of calculating it, the way that I showed you at off the options chain. And yes, it is at 9:30 would give you the exact I guess the exact volatility adjusted move for the day. So if we opened at 64.95, the option chain in the morning, it's going to be like insane. Like it's going to move right at 9:30 because of the volatility of like that first move. So you kind of just look at the options chain and you can get a general idea of what the at the money straddle is. For me, I'm just getting like a rough one. Like if it says 52, I would say 50. And then I would draw the straddle onto my chart based off of the opening price. So for instance, 64.95 was the opening price. 50 points from that is 65.45, which is where I had my straddle high. And the same thing for the downside. And it gives you like a range. It's not so much a range because we're not going to hit both levels, but it gives you an idea of everyone who's in the market at 9:30 who has at the money positions. This is what the market is currently pricing in. And oftentimes you'll see that the straddle price. So for instance, today, I'm just using today as an example, that 65.45 level would have had some orders there. And you can see based on the OptionsDepth chart that there was orders there. The start of the day had about 1,900 positions, which is somewhere around here. And then it obviously loaded up, but there's normally positions there because I guess people take trades based off of the at the money straddle. But once we blasted through, they had to take this position off, or else they'll be taking some big losses. But if you track it enough, you'll often see that the straddle prices will have positioning there that often times causes rejection or bounces, or it gives you an idea of where we might see a rejection or a bounce, especially if you get some correlation with other technical analysis indicators and stuff like that. And if you're trading like a 1 minute chart, for instance, some people would have something equivalent to a straddle, but it's not a straddle. It's the ATR that some people use. And it's the average true range, I think, is the name of the indicator. And it gives you an average of what each candle will be based on like a certain look back. So that when you place your entry, you normally have like a 1.5 ATR stop loss just in case, because it's vol adjusted. Like it's an average true range of every candle, or of the past 5 or 7 candles, whatever your look back is. And then you would adjust your stop loss accordingly. Obviously, this is something that you should test first, but especially if you're going to be knife catching and stuff like that, a lot of people use ATRs so that they don't get that vol spike where that hits your stop loss. I have a question. If I am entering short at 10:37 a.m. top wick, 10:37 a.m. top wick. Okay. I look at the straddle at, it says 30 or 35 points at the money. We can hold it much longer than. So this is why I only watch the at the money straddle at the beginning of the day, because it's going to give me the rough peaks and valleys to the price action at the beginning of the day. Like, I use it as a timestamp, if you will. I won't look at the at the money straddle at 11:30 or at 10:37 but it's just inconvenient for me, and I don't trade off of that. If you like, you could use an ATR instead, and maybe I'll pull that up. All right, just to make sure we're looking at the same thing here. So I got the average true range at the bottom here, and at 10:37, the ATR is set at 9 on the 1 minute. So so a lot of people I've seen in the past, when they use ATR to set their stop loss, they have to set it at like 1.5 or 2 times ATR. And often other people even use 2.5 times ATR. It's based on their back testing and how their strategy works. But let's say you would have entered at 32. There's 13 points. So 1.5 ATR might have worked out just barely. It's possible to check the 9:30 straddle data for previous days. I'm not sure. I don't know if there's a service that gives you the straddle every day. So let me see here. Yeah, I think the best I can do is probably look back at the vol signals Discord, and there's like people that that request the straddle data at certain times before the market opened. So for instance, yesterday when I did it, it was about 47.8 is a straddle yesterday, and then I would use 47 as like my at the money straddle, but obviously that might have been like at 9:07. Let's say I took the at the money straddle, and if price fluctuates 5 or 10 points from there, I will still keep that at the money straddle, but I would just add it or subtract it from the opening price of SPX. But if we move 20 or 30 points, that would be a there would have been like a decent volatility move, and there's a decent chance that the straddle that I requested at 907, for instance, and I timestamped it at 907, was incorrect, because if we moved up 30 points, VIX or volatility would have dropped a little, and so I would have to request the straddle again, or look at the option chain as soon as the market opens at 9:30, and then kind of do a best guess. So the screenshot that I'm showing you was as of like 11:30, and the at the money straddle now is at 65.70, like, because roughly that's where we were hanging out at, around 11:20, 11:30 whenever I took the screenshot. But I'm just showing you how the options chain looks like, so that way when you look for it in the future, you can find it. It was just an example. But yeah, the on mine, I think I was looking at the money straddle as of around like 9 o'clock. Around like 9 o'clock. So I used 50 points, or 52. But when I actually did the when I drew my straddle high levels, I just used 50 points roughly, because it's just like a rough range. But yeah, the at the money straddle changes throughout the day. So like, let's say by the end of the day today, and I'm going to timestamp it at 11:30, and we're sitting at 65.70, then what I had shown you would have been correct. It's pricing in a 20-point move up towards 65.90. So unless something happens, we're likely to stay within this 20-point range on the upside, and we probably won't see more than 20 points to the downside from 65.70 towards the end of the day. This is what the market has priced in as of 11:30. So the at the money straddle that I normally show on my on this screen here is the at the money straddle at around 9:30, and that's when I normally draw in my straddle highs and my straddle lows, right when the 9:30 level is defined on SPX at open. And that's just a guide for the day, like, but if for traders, a lot of traders who scalp use ATR, and I'm not sure if you're familiar or have traded with ATR before, the average true range. Okay, the best that I got on the Discord is 10:30, which would have been before. It's 10:29, and that priced in a 42-point move. So it was clear that it was mispriced. But at 10:58, that had then adjusted. Let me see, 10:58. 10:58, the straddle then was at 39.5. So as time kind of decays the options, you can expect the straddle price to kind of decline. So like if I showed you, give me 1 second here, I'm gonna see if I can take another screenshot. Here, this one might actually work much better for you. So this is a chart that shows both the spot price on SPX and the straddle price, which is shown in green on the right side here. So this shows you like the rough straddle price since open. And it looks like it was sitting at around like 46 instead of the 52 I had identified prior to open. But again, it's pretty rough, and I normally round it to the nearest 5 points. But if you take a screenshot of this would give you what the straddle price is on these moves and throughout the day so far. But if I had shown you yesterday's, for instance, as an example, this is how the straddle price would generally look towards the end of the day. Like you're generally going to see options prices decay towards the end of the day. I got this chart from Vol Signals. He generates them with his bot because he has the data. I have no other way to download these, or not download them, but to see this specific chart. Like you would have to purchase CME data directly and chart this yourself, which is what Vol Signals is basically doing. But my only use for the at money straddle has always been open. So for instance, let's check this one. I think we opened at around 65.63, let's say 65.63, and the straddle price is about 42. So where would that take us? Price action would have taken us to 66.05-ish, right? So 66.05-ish would be where we would have expected the market, like this is what the market had priced in. And this is where SPX happened to top roughly. 66.05, 66.10. I think it was 66.08 was the real top. And if we looked at yesterday's, let's say 1 o'clock, yesterday at 1. Yesterday at around 1. Yesterday at around 1. Here is the gamma chart. And you can see at around 1 o'clock, this is the 1 o'clock update, as you can see. on OptionsDepth. And I think roughly 66.05 was what was priced in the market at open. So the market moved towards 66.05, and you can kind of see there's positioning here. This is a call spread between here and here. And whoever put that on is expecting the market to close beneath 66.05 for max profit. So if this is a short call spread or a call credit spread, whatever you want to call it, they placed it right at the money straddle. Options chain. I think, I don't know that you'll get the options chain with updated data without a broker, or without paying. I think guys like a lot of these volatility guys like Spot Gamma will probably show it on his charts. Oh, actually, there's a guy that does, and he's on Twitter, and you can probably get it for free every day. But I mean, I'll post it when I do stream too. But give me 1 second here. I think there's a guy named Yamco. He's a guy I follow, and he offers a free Substack. He also offers a paid Substack, but the free stuff is good enough, in my opinion. And there's a lot that can be learned from this dude. He offers a lot for free. His name is Yam_trades on X or Twitter. But he would identify his overnight straddle and his morning straddle every day on X at around like 8 or 9 o'clock. So you can draw in your levels, Dan. I think between him and so they like to do these morning calls on Twitter for free. Yeah, on Twitter for free. Yamco, YAM_trades, TRADES. That's his handle, and he goes by Yamco on his actual Twitter name. But he gives it out every morning for free. He also tracks a weekly straddle. I don't know where his timestamp is for the weekly straddle, but both him and then you'll probably, if you ever sit in on one of his morning calls or his afternoon calls, he normally has a call with Yamco himself, Tony Mansour, also a great resource, and IV Trader. And all of them use OptionsDepth. IV Trader kind of goes one step beyond, and he actually purchases data from OptionsDepth through an API, I believe. And he runs his own calculations based off of that. And then he managed to come up with like weekly levels. He offers some things for free, but because he's in this Discord, he joined a Discord called Trade with Insight, TWI. And ever since then, I guess there's less free things on his Twitter page. But he's also a great resource when it comes to reading these OptionsDepth charts. Like I found out through him how to kind of read it a little bit better from an intraday perspective. But yeah, as you track the straddle, and then when you kind of look at positioning, roughly where those edges are, where the edge of the straddles are, you kind of see that a lot of positioning start building up around there, like yesterday. And then we hit this positive gamma pocket, if you will. Mind you, it had shown as negative gamma, but I'm pretty sure it was very positive around this time. And then market could not blast up any further. It couldn't, and it just kind of hung there for like a good half an hour. And then once it fatigued, we started seeing some selling, and then volatility started really picking up at around here. So that that at the money straddle ended up working reasonably as a rough indicator for where price may reject or bounce. But yeah, this was the example from yesterday. And then if you want the screenshot from today, this is it. It's a great tool. I don't use it beyond just confirming what, I guess I don't use it beyond the opening price at the money straddle, and possibly the overnight at times, but I personally don't care about the overnight, mainly because I don't trade overnight. But guys like Yams, he posts the overnight, the morning, and the weekly straddle. But keep in mind that his at the money straddle is likely taken whenever he does his analysis, right? So this morning, it was timestamped at 8:19, and the straddle price for the morning straddle was at 57. So it's a little higher. But I wouldn't rely on the edges of this to short unless you see something. Like I would always use it as like some sort of confluence. Like today we blasted right through that straddle high of 65.45 that I had marked out, and we just blasted through like another 60 points, if you will. So I would normally try to find some sort of confluence, and if you ever track, if you do track the straddle, oftentimes what you'll see is if we gap down, the straddle price almost, at least I'm going to say at least 50% of the time, prices in a move to gap fill. Today it did not do that, but there have been other days that I've been tracking it, and it's generally towards gap fill. Like yesterday, for instance, towards gap fill, I think it was priced in, the lower part of the straddle priced in a move to gap fill, which is why I was a little bearish on the day, and then I would have expected a bounce there, but instead we hit the top of the straddle and then sold off to roughly where we had opened. But yeah, much like anything else, I would say it doesn't work 100% of the time, but it gives you a general idea of what the market is pricing in from a volatility perspective. And then sometimes guys like to check midday just to kind of see, hey, is vol coming off right now? Or is it still high volatility right now? It's like their way of measuring volatility. I don't know about these straddle levels, but it seems that the money straddle range at swing points may give possible TP ranges. Yeah, it's possible. It is definitely possible. Like for instance, yesterday, if I had caught that short, I would have definitely and had the balls to hold. Sorry for being vulgar, but yeah, had the ability to hold to gap fill yesterday. Had I got in, of course, I would have had the runner take profit at gap fill, which would have been the bottom of the opening at the money straddle. But yeah, like you're right. I would not expect if I'm swinging, like if I'm holding a trade and we reach the straddle, unless you're expecting and you have like something high probability that shows that we're gonna bust through it, there's no need to hold beyond the straddle price. And then there's times that we don't hit the straddle price at all. So it's just keep that in mind. And as you track it, you'll notice. You'll notice and you'll learn from it too. I like stats, or not stats, but I like ranges when they're volatility adjusted ranges. Like when someone says, I'm gonna use a 5-point stop loss all the time. And I'm like that. I was like that for a while. But it also keeps you out of trouble, that 5-point stop loss. But you might constantly hit that 5-point stop loss if volatility is high, right? Because not everyone's going to have a perfect entry. So there's some people that use average true range, ATR, right? And that's what I'm showing here. That bottom indicator. And all you really need is this number. So what I would do is move it to the interval. Oh, sorry. Oops. Undo. I don't know what I did there. I would move this to the existing pane above, and then I would make it black or something, so that way it gets out of the, like, I wouldn't show, or make it like transparent, completely transparent. Now you won't see the ATR anymore, but if you look at the 1037 candle, you'll see that the ATR is almost 10 points. And if it's 10 points, let's say you did your back testing and you like the 1.5 ATR, 1.5 times ATR, your stop loss here would have been 15 points, and it would have worked out really nicely for your short had you enter at 32, right? 32, yeah. I notice there are a lot of traders that use ATR because to some degree it does seem like it's volatility adjusted. I wouldn't say it's volatility adjusted because it's not based off volatility at all. It's just based off of candles, the average candles ranges, right? So what you can do is just get like a Claude or an AI to basically calculate average true range and maybe show from there a band. So maybe you don't hide this at the money or ATR level, and instead you get like a ChatGPT or a Claude to program a code that says here's 1.5 ATR, and here's 2.0 times ATR, and then here's 2.5 times ATR, and it just makes it a little bit easier for your back testing. And then you'll be able to see that, okay, here 1.5 it wouldn't have hit, but maybe another day it hits when you're based on where you would enter, right? But I've seen people use as much as like 2.5 ATR, which is insane, but it's kind of a pain in the butt to hold this trade short if I was in it. Like where you had shown your take profit was like the perfect take profit and minimal heartache. Yeah, but because I'm a options guy, I prefer volatility adjusted things. Yeah, I'll try to also state what the rough straddle is every morning, but I realize like I don't change my screen very often, so it's hard to see, right? But yeah, unless you have anything else for me, I think I'm gonna take off now, and then I probably won't be back on until about April 14th or 15th. And I'd be curious to hear how you're doing with and how you make out with the GEX spot. So hopefully I'll see you on April 15th or something on the next stream to kind of hear about your GEX spot journey. What I do is I don't close at 6,600. I will trail stop 6,600 and 2.5 points. Yeah, that's good. In which case, yeah, it probably would have hit. So as soon as it got to like 599, you would have trailed, and it would have gotten maybe stopped out at about 6601, 6602. All right, Koshik, take care. Hopefully I'll see you April 15th. That'll be when I'll be back. Take it easy, buddy.